Hello, welcome you all to this event, the new digital economy, the money of the future. This event is being sponsored by Mercado Bitcoin. My name is Fernando Torres. I'm Valor Investors editor. And together with me today, we have a very special guest, a person that recently became one of the most prominent ambassadors of the most famous cryptocurrency, the Bitcoin. I'm talking about Michael Saylor, the CEO of the American software firm MicroStrategy. Well, if you were in another planet the past year, it's important to remind you that Saylor and MicroStrategy made the news last year after the decision of investing all the company's cash in Bitcoin. Hi, Michael. It's a great pleasure having you here today.
Yeah, thanks for having me.
Okay. And we also bring to this conversation Roberto Dagnoni. He's the chairman and the CEO of the 2TM Group, the parent company that controls Mercado Bitcoin, which is the largest cryptocurrency exchange here from Brazil. Hi, Roberto.
Hi, Fernando. Hi, Michael. Pleasure to be here.
Well, just to give you some context, by August 2020, MicroStrategy started out by purchasing $250 million in Bitcoins. Back then, the BTC was worth around $10,000. A few months later, the investment grew to more than $1.5 billion and proved to be a success, with both Bitcoin and the company's prices skyrocketing since then. As you can imagine, Michael's life has changed, and he became a sort of spokesperson for Bitcoin and spreading out the word that every company, including those listed here in Brazilian stock market, should have Bitcoins, should buy Bitcoins with their cash. Well, Michael, it has been more than a year since you first started buying Bitcoin to your company. And I'd like to hear what's the importance and the meaning of this decision to the market broadly.
Well, I think that every company in the world traditionally had a treasury strategy of holding cash and credit, as did we. And in March of 2020, we had $500 million of cash and credit generating a 0% yield in an environment that was likely to generate 20% monetary inflation. And so our conclusion was, if we didn't do anything, we were going to lose 20% of our purchasing power a year. And given 4 years, we were going to largely diminish our treasury. So we started looking at an alternative to a conventional treasury strategy. Cash and credit are crumbling, and they're crumbling for every company on earth. They're also crumbling for every individual on earth. So this is the fundamental problem. The solution is a digital property or a form of property which is going to appreciate in value as the money supply expands. So we considered, should we buy land, or should we buy real estate, or should we buy equities or stocks or indexes or rare art or collectibles or sports team? And our conclusion was that the highest form of property we could find is the dominant crypto asset network, and Bitcoin is the dominant crypto asset network. So we flipped the $500 million of cash and credit into Bitcoin. 1 year later, we have about a $5 billion treasury holding in Bitcoin, and Bitcoin's been going up 130% a year for the past decade. So we have converted a $500 million liability into a $5 billion asset. I think it's pretty obvious why any company in the world would want to do that. Everybody else shares the same macroeconomic challenge that we have. I think that's what's exciting about the last 12 months.
And do you think the reaction would be the same if the Bitcoin would have meltdown since then?
Well, if you choose wrong, then you're punished for it. We had a choice of choosing to invest $500 million in Bitcoin or $500 million in gold. If we had invested the $500 million in gold, we would currently have about $450 million in assets today instead of $5 billion in assets. And instead of a multi-billion-dollar gain, we would have $50 to $100 million loss. So yes, you can't guess wrong. You have to choose correctly. And on the other hand, I think that Bitcoin is digital gold. It's pretty clear that digital gold is a better idea than gold. And so I'm not so concerned about what would have happened if it hadn't worked. If it wasn't going to work, it would have been gold. And if it was gold, I wouldn't have chosen it in the first place. The whole reason we chose Bitcoin was because we concluded that if Bitcoin works, gold won't work. And that has come to fruition.
Okay. And I would like to also to ask you if you had any questions coming from the SEC, the Securities and Exchange Commission, about your decision, or from your shareholders, since the primary objective of your company is to develop softwares, right?
Well, we did extensive due diligence before we made this decision, and we considered the legal ramifications, the securities law, and the other choices. Bitcoin is unique in the entire crypto universe, and that it is deemed as a commodity and property, which means that it isn't subject to securities laws in the same way that a stock would be, or a derivative instrument like a future or a fund. So a publicly traded company can hold as much property as you would like to hold. We could have bought billions of dollars of land or timber or coal or oil or Bitcoin. They're all just property. If we had chosen to invest in Apple stock, when we got to the point where more than 40% of our tangible assets were in the Apple stock, we would have tripped the SEC 40 Act. And that would be a challenge for us. So Bitcoin being deemed as property is a very important distinction for an operating company that actually files registration statements. Obviously, we don't trade it. We're not a market maker and the like. So that's not an issue. What was the second question you had?
If your shareholders.
The shareholders.
There was a question about that.
Well, we didn't just immediately go from having no Bitcoin to having 5 billion worth of Bitcoin. We started with 500 million in cash and sovereign debt. And we did announce that we were doing the study, and we put that out as an SEC filing to all of our shareholders. And then after that, we bought 250 million worth of Bitcoin, and we simultaneously announced a $250 million share buyback, a Dutch auction. So we actually offered all of our shareholders the ability to either sell their shares at a profit or to keep their shares and participate in the strategy. So we were very deliberate.
So you give them a way out.
Yeah, well, we gave everyone the full disclosure, and the stock was trading at $120 a share. And if they didn't want to take the risk of owning a company's shares with Bitcoin on the balance sheet, they could sell their shares back at $140 a share to the company. And they had 20 days to think about it. So whenever you make a very large strategic move as a publicly traded company, it's generally wise not to surprise your shareholders. What you want to do is fully disclose it, and then we gave them the option to either buy more or sell what they had. Some sold in the open market at more than 140. The stock traded above $140 a share, and they could have sold at $145 or $150 a share, and they got an immediate windfall if they wanted to exit their equity position. Some sold. Only about $60 million of stock was tendered. And so at the end of the offering period, we had an extra 175 million in cash, and we bought Bitcoin with that. Subsequent to that, the stock, of course, traded above 140. And today it's about 5 times what it was when we first announced the strategy. So shareholders that have held the stock have benefited from it. What was your question?
I'm sorry, it got the high level was 1,000, the stock, right? Above 1,000.
Yeah, at one point it traded dramatically higher than 120. So it's only been beneficial for shareholders since we announced.
Okay. Well, I would like to ask Roberto, is of your knowledge if any Brazilian mid to large company has bought any cryptocurrency and disclosed that to the market, or maybe you know that they bought, but you know that they didn't disclose?
Hi, Fernando. Well, since this movement from MicroStrategy and Tesla, we've seen a huge increase in interest from all the big corps in Brazil, as Mercado Bitcoin is the largest cryptocurrency in Brazil, founded back in 2013. So a lot of them have come to us to talk and understand. So we are kind of sometime behind the US, but we've seen lots of interest from the corporation. So there is a lot of education by the CFOs and treasury departments, family offices, to understand Bitcoin. How should I buy it? Should I make a composition with Bitcoin and Ether? And how should I do my custody? So we've been doing this education. We have acquired Blockchain Academy recently. So we believe in an emerging country like ours, we have to put a lot of effort on education, especially when you are talking about such a new technology. And we do have corps as clients already with positions, but they have not disclosed those positions yet. So we believe we will see a lot of activity in the institutional domestic market, as Coinbase has reported more than 8,000 institutional clients in the last quarter. So we are in the early days here.
Okay, and another question to Roberto. We have reported a few weeks ago a series of enforcement actions taken by the SEC there in the US regarding crypto companies, including some exchanges. And the SEC chairman, Gary Gensler, is being very vocal about regulation of this market. It seems to he wants that brings the exchange to the regulated market. How do you guys from Mercado Bitcoin follow those developments, and what do you think about that?
Well, we have a close relationship to the regulators here. We see the Brazilian SEC, which is our CVM, and central bank very supportive of innovation and very supportive of fintechs. We've seen this recent activity of PIX, our instant money transfer, taking place and used by more than 100 million Brazilian users. So I think it's normal to have this kind of approach from regulators to understand and how to treat such a new technology. So we always apply the analysis when we are listing a token, if that's close to a security token or not. And we have listed many non-security tokens, and when it's necessary, we do queries to the CVM to understand if their view about a specific listing is under security or not. We have a pro-regulation view in terms of Mercado Bitcoin. So we have our initiative to have institutional custody, which is Bitrust. So we want to develop this custody for the institutionals in Brazil. And I think it's important to highlight that our CVM has approved crypto funds and also ETFs, which is already a big development in this market. So we see now more and more individuals investing straight on the exchange or through funds and ETFs. So we see a healthy development on the regulatory approach by the Brazilian regulators.
Michael, as Roberto has mentioned, the custody is sometimes a concern of big companies, if they should buy directly Bitcoin or if they should get exposed to Bitcoin through funds and ETFs and things like that. How is your strategy there in MicroStrategy regarding this custody thing?
Our strategy is to buy the Bitcoin as the commodity through institutional grade traders that we vetted through our due diligence process. and to store it with a variety of institutional grade custodians that we've also vetted with due diligence to meet our security and accounting standards. We do that because we want to hold the commodity, because that gives us the right to transfer billions of dollars of assets between counterparties without a taxable event. And also because if you're holding billions of dollars of a commodity, or 100% of your balance sheet is in a commodity, it's property, it doesn't trip any SEC limitations like the SEC 40 Act that would make it, if you were holding all of your assets in a security, then you would be a financial entity and you'd have to file a different set of statements, and you would be subject to a different set of regulations. So our approach has been to acquire the property. Having said all that, if you're an institution or a big company and you just wanted to, if you had $1 billion and you just wanted to put $100 million into Bitcoin, you might find it much easier to buy a fund or to buy a security that holds the Bitcoin, because you could do that in 15 minutes with a phone call and just say, give me $100 million worth of this, and you don't have to worry about the custodianship and the trading and the execution. And right now, the accounting treatment for holding it as a security would be mark to market generally, and the accounting treatment for holding it as a property is normally indefinite intangible accounting under GAAP in the US. So there are some technical optical benefits, accounting benefits to holding the security. But I think over the long term, if you're looking out a decade or 2 decades, the option to move billions or tens of billions of dollars of capital without a taxable event between counterparties in order to either pledge it as collateral or achieve yield on it, or just because you want to change it for security concerns, I think that outweighs the benefit of holding the security itself. But I think every single company and every individual is in a different circumstance. And so they're all good options. I think every one of those options is better than holding cash, holding debt, or buying gold. Every one of, so they're just technicalities that you want to consider once you decide that you want to invest in Bitcoin.
And you mentioned the accounting issue. How much of these $5 billion that you mentioned you have is unrealized gains in your balance sheet?
Depends on the day. It can be 2 to 3 billions of dollars of it is just an unrealized gain.
Okay. Well, I have another question here that it can be, it's to both of you. It's about, Roberto mentioned Tesla, and it's about Elon Musk. Tesla also bought a part of its cash, not the entire treasury that they had in Bitcoin. But a few weeks later, Elon Musk came on Twitter talking about the environmental issues regarding Bitcoin, and he stopped this strategy. I would like to understand, in your view, starting with Michael, does Elon Musk helps the crypto environment, or is he a problem?
I think he did a great job of popularizing and marketing Bitcoin. I think the entire mainstream media became aware of Bitcoin, and he did legitimize it through the investment of Tesla on the balance sheet. I think his actions have created some amount of volatility. Okay. That's indisputable. But I think many people that are Bitcoin advocates believe that the volatility of the asset class is a feature of the asset, and it's actually accelerating the adoption of it on a worldwide basis, and that's why it's growing as fast as it is.
Okay, and Roberto, your thoughts about that?
I basically agree with Michael. I think in these early days of the industry, anytime any celebs talk about the assets is good for the education. So I think Elon has done a lot of that, and volatility in a market that works 24/7 and worldwide, it's something natural. So a lot of celebs tweets about it. Michael loves to reply some of them, right? Michael replied to Stephen Curry recently about crypto. So So you've seen a lot of that, and I think it's healthy to the education overall.
Okay. Well, talking about like famous people, like 2 weeks ago, the hedge fund manager Ray Dalio gave an interview where he said that, quote, if Bitcoin is really successful, the regulators will kill it. And last week, China has declared all transactions with cryptocurrencies illegal. What are your thoughts about this kind of risk? Starting with Michael, how do you deal with this risk that the regulators can be a problem to the cryptocurrency?
Yeah, Ray's got a love-hate relationship with Bitcoin. he notes that it's a good idea, and then he worries about it. But I think the criticism that it's so good and it's so perfect in every way possible that I'm sure that someone will ban it is probably the best criticism you can have of any product. He's pretty much said it's the perfect asset in every regard, and so I worry that someone will take it away from me. I don't really find it to be an intelligent or an effective criticism. I mean, if you wouldn't not buy any other product if someone said it's the best product of its class and it meets all your requirements so well that some evil politician will take it away from you. The China ban isn't a ban on owning the Bitcoin. I think as far as I can see, people still can own the property. The Chinese ban is primarily the typical Chinese crackdown on capital flows. The Chinese don't have an open capital market. They haven't ever had an open capital market. They don't want billions of dollars of CNY currency to be converted into assets which flow out of their country. I think there's a limit of $50,000 worth of currency flowing out of China every year per person. So they simply have capital controls. You know, in terms of Bitcoin regulation, the irony here is every single major regulator in the Western world has endorsed the fact that Bitcoin is property and you can own it. Christina Lagarde has said it's property. Jerome Powell has said it's property. All the senators, all the congressmen have said it's property. So the head of the SEC has said it's property. No one is questioning anybody's ability to own Bitcoin as property. All the regulatory FUD is around whether or not you have to pay taxes on it. The answer is you do have to pay taxes if you sell it. If I transfer $1 billion of Bitcoin with a $900 million capital gain, do I have to disclose it and pay tax on it? The answer is yes. You have to disclose your transfers and you have to pay taxes on it. But once you get beyond this idea that you're subject to typical anti-money, AML law, KYC law, tax code, and the like, there really isn't any controversy around Bitcoin to speak of. Even Ray Dalio, he hasn't articulated any controversial statement by any politician in the world, right? So the irony is that people fixate upon that. It's a meaningless thing. All of the FUD in the market has to do with security tokens that aren't Bitcoin, or it has to do with stable coins, which are unregistered money market funds in cyberspace, or it has to do with whether or not you can trade with a 20x leverage on an offshore exchange, which you can't do onshore in the US. So they're ancillary uncertainties. They have nothing to do with Bitcoin as a non-sovereign store of value.
Okay.
Roberto,
your turn.
Yeah, I think if I can add to that, I think we might rephrase that. Regulators might try to kill it instead of kill it. As Michael said, you have different use cases. Like in Argentina, is much more stable coin. In Mexico, you have a high usage for remittance. In Brazil, is store of value. So it's a full development, and as Michael said, the tax gains are fixed in many countries. Like here, the exchanges have to state all the activities by individuals and corporations to the IRS, and we've done that since 2019. And the tax capital gain on your gains monthly work in the very same way as your traditional financial investments. And we report all AML and suspicious activities to the Financial Council as well as the financial market. So I think it's much more developed than the normal knowledge knows about it. And we will see these kind of pushbacks in country A, country B, but we have to have this holistic view on what's going on worldwide. So it's not the first time that China brings a statement on banning Bitcoin in way A or way B. So we'll see these moves and pushbacks, but worldwide we see a very healthy development.
Okay. Well, Michael, you mentioned this in the beginning of our conversation here, but I would like to come back to this topic. We usually talk about investors' perspective of regarding Bitcoin and cryptocurrencies, but you usually say that the common people should take a look to Bitcoin as a way to protect their savings and their money. In this interview that you gave to Valor Invest last year, you mentioned that the quote, "Dollar has a leak on it and it's collapsing." What are your message to the ordinary people, common people, about the worries they should have regarding the fiat currency, maybe dollar or Brazilian reais?
I think the key point here is that Bitcoin is digital property, and it is digital property on the dominant crypto asset network in the world. There are hundreds of millions of people that want to own Bitcoin. So if you want to preserve your life savings and give something to your children or your grandchildren, you need to take your earnings and invest them in some form of property. And before Bitcoin, your choice was to buy a house or buy a building or to buy gold or to buy stocks. And those are other forms of property. But of course, you can't buy $37 of a building, and you can't buy $37 worth of gold without paying an absorbent fee. Bitcoin is property you can acquire for a very, very small cost. And unlike other forms of property, they're not making any more than 21 million Bitcoin. So it is a much better long-term investment. If you wanted to give something to your grandchildren and your choice was gold, real estate, or stocks or Bitcoin, Bitcoin is just a much safer, less risky way for generational wealth preservation and generational wealth transfer. And for those people to say, well, why Bitcoin? Well, the answer is Bitcoin is the dominant digital property network in the same way that Google or Facebook are dominant networks. Once hundreds of millions of people have decided that's the network they're going to use, once hundreds of billions of dollars have decided that's the network that they want to adopt, then the network effect makes it stronger every single week. It's just getting more powerful. So Bitcoin offers a technology which gives the prospect of property rights to 8 billion people. All you need to own is a mobile phone. And once you own a mobile phone, you can own your property. You control the keys. No one can take it away from you. You don't have to worry about someone building an apartment building next to your apartment building and cutting the value of your apartment. And you don't have to worry about a politician seizing your property or passing a law making it illegal to rent your property or putting a cap on the prices you can charge for the rent. You don't have to worry about not being able to take your property when you leave the country or leave the city. This is something you can take with you. You can give to your children. You can give to your grandchildren. And it's the most desirable property in the world, and it's probably going to be the most desirable property, because if you bought a building in Brazil or a house in Brazil, I don't want it. But if you bought Bitcoin, I do want it. Every wealthy person, everyone that wants property in Beijing, in Europe, in South America, in New York City, in California, everybody wants your Bitcoin. It's the most desirable, scarce property in the universe. So if you're going to invest to give something to your grandchildren, buy something that every rich person on earth is going to want in 50 years, and they're going to pay for, because they're all going to scramble to increase the value of that property. Jack Dorsey at Square is going to try to increase the value of the property. Fidelity, every corporation, every big tech company is going to try to increase the value of your property. And there is no other property you can buy where every intelligent person on earth is trying to make it go up in price. This is the one thing. So that's what I would say to any investor. And the beauty is you can buy $25 a week of it and you can keep it. And you're not going to be subject to some intermediaries manipulating your property. You never have to worry about a CEO stealing your money or a board of directors failing you. You don't have to worry about a competitor coming up with a better iPhone, right? It's the least risky way to buy into the technology revolution and the digital property of the 21st century.
And have you thought about buying other cryptocurrencies as well? Do you have other crypto digital asset in your portfolio, or just Bitcoin?
I have thought about it very extensively. There are 6,000 other cryptocurrencies. We only own Bitcoin, and our view is Bitcoin is the least risky, most compelling, most desirable asset in the universe. Everything else is 100 times less compelling, 100 times riskier. They've got competition, they've got regulatory questions, etc. So remember what I said, it's the dominant network, like Google. If you own Google stock, and I said to you, have you considered selling half your Google stock to buy the other 10 search engines? Or if you own Facebook stock, and I said, have you considered selling Facebook to buy the other 10? Or if you owned Amazon or Apple. Generally, the dominant digital network just gets bigger and bigger and bigger. And so diversification is selling the winner to buy the losers. There's one great city in America, New York City. If you'd owned the property in New York City for 100 years, you would have done well. If you had sold your New York City real estate to buy any other real estate anywhere else in America, you would have done less well. And if you had sold your real estate in New York City to buy something in Kansas, you would have lost all your money. Well, the only difference is there's only one great city in cyberspace, and everyone can live there, and it's called Bitcoin. Everyone wants to be in Bitcoin. The Chinese, the Russians, the Americans, the South Americans. So buying a Bitcoin is like buying a block in cyber Manhattan, and one day billions of people want to live there. So this is one of those situations where diversification doesn't make you better off; it actually makes you worse off.
Well, I will take this comment and to ask Roberto to how dominant is the Bitcoin here in the Brazilian trades or transactions that you see at Mercado Bitcoin?
Well, Bitcoin is still the dominant coin and the dominant tech, as Michael said. But we've seen lots of interest in utility coins, and we have Brazilians. We are soccer lovers, so we have, for instance, now the fun tokens of the Brazilian soccer teams and the worldwide teams having lots of interest here. For instance, so we've seen a wider development of new applications besides Bitcoins, but Bitcoin is still the main coin, followed by Ethereum.
Okay, and I would like to ask you also, Roberto, what kind of Brazilians today are investing in Bitcoin or trading Bitcoin? Are they just like day traders, rich families, ordinary people? What is the profile of this kind of people?
Okay, that's an interesting point. Brazilians are really early and heavy new tech adopters. We've seen that with WhatsApp and Uber, and the pandemic pushed that accelerated that a lot. We've seen that in online shopping as well in the pandemic, and it was not different with investment platforms. So we see lots of education coming to these people, and it took us 5 years to get our first 1 million clients, and it took us less than 10 months to move from 2 to 3 million clients that we have reached last week. So we've seen this interest raising so fast, and these 3 million clients is really close to what the Brazilian exchange has in equities in a century business. So we already have all kinds of person, the crypto curious, the high net worth individuals, some heads of family offices, and all kinds of traders, the heavy traders, wannabe traders, high frequency traders, arbitrators. So we have all these kind of traders, and I would say all these kind of individuals.
And what is the addressable market that you call would you imagine for this for Bitcoin and cryptocurrency here in Brazil? Because Coinbase has more than 50 million customers there. Maybe not all Americans, but I would like to have this number for Brazil.
I think the benchmark we have, Fernando, is the equities investors, which is 3.9 million, and we have just reached 3 million. But we see a much broader application, as I said, when a soccer team has their fan tokens, then you are applying to their 25 million fans that have to come and open an account and buy that specific token. And we have tokenized traditional assets, then you come to tokenize a fixed income investment, and that's another bunch of people. So I think the market is huge. We are in the early days of that.
Okay, Michael, about this dominance of Bitcoin, you mentioned Google, Apple, but if you look like maybe 30 years ago, those companies were not the largest U.S. companies. You had other companies on the list that maybe not even exist anymore. How do you take care? What kind of signs do you observe if there is any risk of this dominance maybe lost in the future? How do you watch this perspective in a really long term?
Well, you've got 150 million or more holders of Bitcoin, probably closer to 200 million by the time you add the indirect holders, and you've got $800 billion in market cap. There's no example of any company, of any network in the history of the world failing that reached that degree of success. So the examples of early players, they were like $10 million companies, 100 million, a billion. They were 1/100th as big. I think some of them might have got to, there might be a few examples of companies that got to 10 billion, but once you get past 100 billion, it's pretty hard to stop it. And it's pretty obvious to us that this won't get stopped. Okay. I think with regard to the crypto world in general, I think it's important to note that Bitcoin is digital property. It's a crypto asset that you would buy to hold for 100 years, and it is property. The other types of tokens are more like stocks, like maybe you're investing in the stock of your favorite soccer team, or maybe you're investing in the stock of a company, or you're investing in a very particular area. They're all going to be subject to different regulatory expectations in different jurisdictions. And yeah, if you're an investor, you have a part of your portfolio that's invested in stocks or in venture investments. And you know that's riskier, but you do it because you're really excited about the prospect of that company or use case or whatever. And then you have another part of your portfolio that you simply want to save for the next 30 years for your retirement, and you don't want to express a sentiment that I want this team to win or that company to win or that product to win. So you got to distinguish between savers and investors. And then there are some people that are traders, they just like to trade. And there are some that are speculators, gamblers. They're all legitimate uses, right? Subject to different regulatory jurisdictions. Bitcoin appeals to people that are savers. They simply want a way to convert $1 million worth of some currency into a non-sovereign store of value and let it sit there for a decade. And in that use case, the network, the product is perfectly engineered for that. every other crypto asset isn't engineered for long duration store of value. And so they won't win that market segment because they're not engineered for it. No one's trying to do that. They're actually engineered for something different. And Bitcoin itself is the choice of the market when the market looked at 10,000 different options. And you know, after the thing gets to 800 billion and 200 million people use it and it's 10 years old and it's still winning, if you still don't believe it's the winner, well, then you would have missed Apple, Amazon, Facebook, and Google and every other successful technology company in our lifetime because all of them were very obviously the winners before that point.
And Michael, why would you say that? Why you don't see lots and lots of companies, of like very large companies, buying Bitcoin as the same way as you have done?
Well, actually, the interest is exploding. A year and a half ago, we were the only public company that held Bitcoin on our balance sheet. And today, you would find about 3 dozen, and you would find, as Coinbase disclosed, 8,000 different institutional customers. So there are thousands and thousands of companies that are buying Bitcoin just in the past 12 months, and we've gone from nothing to 35. I think that the primary impediment that keeps companies like the Facebooks and the Googles and the Apples from buying $10 billion worth of Bitcoin or more is the indefinite intangible accounting treatment from GAAP. And that right now is an issue that's in front of the Financial Accounting Standards Board. Just last week, 135 companies submitted letters to FASB on that subject. And the general sentiment of the regulators and the industry is that fair market accounting is a better accounting treatment than is indefinite and intangible accounting. I think that we can't know when FASB will take up the issue or what their conclusion will be because that's up to them. But certainly, if they were to actually switch from indefinite and intangible accounting to fair market accounting, I think that would be a big catalyst for more institutional adoption, especially corporate adoption. The thing you got to keep in mind is if you're a publicly traded company, if you buy $10 billion of Bitcoin and it trades down 50% and then it increases by a factor of 10, your balance sheet would be holding $5 billion in assets while you would actually hold $100 billion of assets. And you would be showing $5 billion of operating loss when you actually had $90 billion of investment gains. So when people say that companies are afraid of the volatility of Bitcoin, we're not afraid of the actual volatility of Bitcoin. The typical CFO is afraid of the accounting optical volatility of Bitcoin. Because if you spend a decade creating the perfect P&L and the perfect balance sheet, and then you made one investment and 10 times your money, and then it looked like you lost money, and you had to explain it for an hour to 2,700 of your investors, it would be irksome, right? So what you have right now is a few things that are catalysts for much greater adoption. And that's one. The other one will be an ETF. If an ETF is approved in the US, that'll be a catalyst for institutional adoption because that will convert this from taking 6 months to a year to buy the underlying asset to actually being able to buy the asset in a matter of minutes. But having said both of those things, Bitcoin is the best performing asset in the past 12 months in the world. So I kind of view this as if it was going any faster, we'd rip the wings off the airplane. Right? Gold has gone up 0% in a decade. Bitcoin has gone up 130% in a decade. Gold is down like 8% in 12 months. Bitcoin is up 250% or more in the same 12 months. So the asset is succeeding at an extraordinary rate as fast as the economy can absorb such a change, I think.
Roberto, is this accounting issue, is it a problem here also? Do you see concerns about like big companies talking about that or something like this when they are wondering if they should buy or not some Bitcoin?
Fernando, it's the same. So the concern is how to report that. We are some steps behind, and the companies are still learning how to use our OTC desk to make those trades and how they're going to perform their custody. And so they're still learning how to implement that. But yes, accounting is an issue but it's going to be addressed sooner than later. That's the positive side, as Michael said. With all this interest, it has to be solved.
Okay, Michael, just like to ask you about gold. Why didn't you choose gold back then? What are the problems with gold?
I think if you have $500 million and you're looking for something you can buy, and your choice is Bitcoin or gold, gold is a metallic money. And when you buy the 500 million worth of gold, it sits in a vault and it doesn't move for a decade. Bitcoin is digital money. And once you buy 500 million worth of Bitcoin, you could move it to any of 100,000 counterparties in an hour for free. You can program it with any computer. So I could split it into 100,000 components, loan it to 100,000 counterparties, and then reconstitute it every week. So Bitcoin it's faster money, it's stronger money. I could send Bitcoin to a bank in Tokyo and then to a bank in Singapore, and then I could loan it to someone in London, then I could fetch it back. So it's faster, smarter, stronger money. If I hold it for 100 years, Bitcoin is still going to be, one Bitcoin is 1/21 millionth of all the money in the network. If I buy gold, gold's going to be diluted by 90% in 100 years because gold miners keep producing more gold. So ultimately, Bitcoin is the harder, smarter, faster, stronger asset. And the reason we bought it is because if you just wanted the macroeconomic inflation hedge, you want to buy something that no one can make any more of. And if you wanted the technology investment, there's no way that Apple or Google are ever going to build gold into Apple Pay or Google Pay. You're not going to distribute gold to 8 billion people every day and 1 billion transactions an hour. It's not going to happen, right? But with Bitcoin, we see it being built into Square and PayPal, and we see people buying it on iPhones and Google phones. In El Salvador, we just saw 2.1 million people download and get access to Bitcoin wallets in 2 weeks. In fact, more people were onboarded to the Bank of Bitcoin in 2 weeks than had bank accounts in El Salvador in 200 years. And so the point is, gold was the best idea in the 19th century. It's just not fast enough, and you can't program it, and it's too heavy. Bitcoin is the best idea in the 21st century. And the same people that want to buy gold, they're only going to buy the gold because they don't know what Bitcoin is, and they're afraid of the future, or they don't understand the technology. And as they start to understand it, and when they're not afraid of it, then they're going to sell all their gold and they're going to buy Bitcoin. And so there's $10 trillion in the gold market cap now. When someone sells $5 trillion of it, where is Bitcoin going to go? If they sell 1 trillion, where is Bitcoin going to go? Think about it for a second. Bitcoin's only got a market cap of 800 billion. If 5% of the people owning gold sold it to trade it for something better, it's going to have a disproportionate impact on the price of Bitcoin. And then, of course, the real problem is, as people realize that Bitcoin is solving the problem, generating a 200% yield, and gold is generating a minus 5% yield, the problem is any intelligent person that reads charts and does math is going to short the gold, go long Bitcoin, and that becomes a self-fulfilling prophecy. So some people say, well, we have some gold, we have some Bitcoin. And, and if gold does well, Bitcoin will do better. But that's not the way we saw it. The way we see it is if Bitcoin does well, gold won't. If Bitcoin succeeds, gold can't succeed, because the world needs one non-sovereign store of value. Gold is a monetary network based on metal. Bitcoin is a monetary network based on cryptography. it's very reasonable in the first year, the second or the third or the fourth to be afraid of it. And then the ninth and the 10th to be afraid of it. But after you've waited a decade and it's been attacked 10,000 times and it hasn't failed, and you've sorted out how you're going to tax it and whether it'll be banned or not be banned, there's some point between year 11 and year 20 where rational, intelligent people have to adopt it. And if you're going to ignore a world-shaking invention for 20 or 30 years, that's pretty much your career, right?
Yeah.
So you can't wait 30 years before you decide to buy an automobile or fly in an airplane or use electricity or use steel in a building or use Bitcoin in your portfolio, right? I can understand that you might not want to buy it in the first decade, but we're in the second decade. This is the decade of institutional adoption.
I was wondering if the fact that the BTC is not being used as a currency, that might some people think like maybe it's not working because it's not being used. Was maybe the primary reason of,
yeah, I think that's
creation.
irrelevant because your house is not used as a currency, but a lot of people store their wealth in their house. And steel is not a currency, but you would never build a city without steel. And electricity is not a currency, but you can't have a civilization with electricity. Bitcoin it's a digital property, or it's digital energy, or it's digital money. $1 billion of gold is not a currency, but if I gave you the $1 billion of gold, you'd take it. So it's an asset, and it's a better asset than the thing it's replacing. It doesn't need to be a currency. And in fact, the future of the world looks like this: 8 billion people with a mobile phone with a digital wallet. And in that digital wallet is a collection of currencies: the dollar, the real. They'll have some dollars, they'll have some real, maybe they'll have some bolivars, but they won't hold the bolivars very long. They'll get rid of the weak currencies, they'll trade them for the strong currencies, and you're going to use the dollar to buy things. And then there's going to be a collection of assets, and Bitcoin will be a strong asset, and there'll be some other assets, some stocks you like, maybe that sports team token you like, right? I mean, people will have strong assets and weak assets and speculative assets. And ultimately, the thing that's going to make this work is everybody can have a $50 Android phone, and they can carry their assets and they can carry their currencies around. The weak assets get squeezed out of existence, and the weak currencies get squeezed out of existence as people trade up to a better currency and a better asset.
And Fernando, I think to add on that, the second layer of applications and distribution, imagine that the distribution is still very limited, but as soon as you have PayPal listing that, you have all the sort of clients of PayPal with quick access to that. So we'll see in a very short term all these front ends from neobanks, retail marketplaces, having those buy, sell, hold buttons, and we as the exchange can supply liquidity, custody, KYC, AML, tax reports to all of those companies. So it's really easy to go on that. And as those are not cryptocurrencies, it's an asset class. It's like Amazon is selling a bicycle, and then is selling these different asset class. So that's where the massive adoption comes, when the distribution comes so easy and access different pools of consumers. So we are seeing the interest to put those buy, sell, hold on these front ends, and as Michael said, Bitcoin is the main is always going to be the first one to be on the screen, and that's supporting a lot the fundamentals, and is going to change even more the supply demand of this asset with this limited emission.
Okay, well, we are coming to the end, but before we finish this conversation, I would like to ask you both about your perspectives about the Bitcoin price. Roberto, starting with you. We are now around 40,000 for one Bitcoin. Do you have any thoughts about that?
Well, we cannot foresee the Bitcoin price, but what I would like to call the attention, and we always talk to people, is you always should look at a wider range of time. So when you look at the beginning of 2020, 10,000 US, it changed the spike to 60,000, and now had this dive to 40. So people say, well, it came down from 60 to 40, but 40 is still 4 times the 10,000 of the beginning of 2020. It's 4 times a year and a half. So when you look at this big window, we always see after this volatility and there is some dive, it stalls in a much higher level than the levels that you had before the spike. So you have to look at in a wider range. So that's a good thing about it.
And what about you, Michael? You mentioned what can happen if some people maybe they starting selling gold and buying crypto, but what would you say about the short-term perspective for Bitcoin?
Look, I think volatility is the price you pay to get the best performance in the asset class. But there's never going to be more than 21 million Bitcoin. It's a monetary protocol. It's a one-time invention for the human race. There's no reason to think that it won't be around 1,000 years from now. It's just going to go up with volatility forever, right? If you have a less than 4-year time horizon, it'll be bumpy. If you're trying to make money in 4 weeks or 4 months or 4 days, you're a trader and a speculator, you're probably going to find better options with other assets than Bitcoin. I would say if you're going to hold it, you shouldn't hold it for 10 minutes unless you're going to hold it for 10 years. So you should put the amount of money you want to hold for the long term into Bitcoin. You can speculate or trade or invest with the other sort of money. And just sit back and enjoy the ride. It's engineered to be a non-sovereign store of value on a digital asset network. And it's remarkably successful at that. People that are staring at it every minute are just giving themselves anxiety. I wouldn't do it. I would just relax.
And what do you do about your personal money, your own money? As an individual, do you have all invested in Bitcoin, or do you invest in other asset classes?
I bought more than 17,000 Bitcoin when it was in the 9,000 range. Haven't sold a Satoshi. So I have quite a bit of Bitcoin personally. I have other assets as well, but the most important point I make is I'm a big personal Bitcoin holder and my company is a big Bitcoin holder, but we're long-term savers, or you could look at us as long-term tech investors or long-term savers. I don't begrudge people investing their money in, buy your beach house, buy a nice house, buy your trophy art, buy your sports token, buy the things that you love if you want to buy those things. But for that portion of your assets that you want to give to your grandchildren, where you just want to buy it and not think about it for a decade, Bitcoin, of all the things available in the universe, is the apex property for that. Every other form of property, be it gold or art or real estate, commercial real estate, oil rights, commodities, stocks, indexes, bonds, all of these other forms of property have more risk: credit risk, execution risk, competitive risk, regulatory risk. And you have to manage them and think about them and understand the market. Bitcoin is the apex property, and it's the long duration, institutional grade, safe haven, store of value asset. People that fixate on every minute, they're gonna want to focus on the volatility. But when you zoom out, our company got roundly criticized for buying $500 million of Bitcoin when it was $10,000 of Bitcoin a year ago, as Ricardo points out. Right, there is no other investment we could have possibly made that would have performed as well in that time period. So I'm comfortable with it for the long term. In the short term, everybody that focuses short term is going to have anxiety, because that's what it means to be short term focused.
Okay, so the only problem you have mentioned lots of good attributes of Bitcoin. So the volatility would be the one that you should be concerned about if you have this short-term perspective.
Yeah, I mean, you won't have volatility if you buy land in the middle of the countryside, or if you buy a building, or if you buy gold, but it won't go up either, because I don't want your land. I don't want your gold. No rich, intelligent person, Apple, Google, Facebook, no billionaire in China, Asia, South America, Europe, they don't want to buy those things that aren't volatile. What they want to buy is the dominant crypto asset on a worldwide monetary network, because it's programmable, it moves at the speed of light, it's the most secure, most durable thing that you can build something on in cyberspace in the 21st century. So, if you don't want volatility, just keep your money in cash. You're just going to go broke slowly without volatility.
And what this concern that you have with the dollar, does it? How do you see these affecting the American economy broadly? You have concerns about that also?
What's going on right now is the dollar is spreading everywhere in the world. So the digital transformation of money means that you're going to have a digital wallet with currencies, and the dollar is the winner. That's why the dollar is spreading everywhere on earth. And you're going to have a digital transformation of assets, and Bitcoin is the winner, right? And companies that can give you the digital wallet, like Ricardo, are in a great business, because Ricardo is giving you the application with the accounting, with the compliance. And so if, every one of his customers is going to need that wallet to hold the mixture of currencies and assets with the back end. So that's the future. Right? The dollar is not at all threatened. What people don't realize is the dollar is spreading like wildfire through Asia, through Africa, through South America. The loser isn't the dollar. The loser is the peso. The loser is the Naira. The loser is the Bolivar. The loser is the Lebanese pound and Syrian currency. What's the native currency of Afghanistan? That's the loser, right? The bottom 100 countries on the earth, the weakest countries with the weakest banking systems, are going to lose their currencies if they have them. And the winning currencies will be the currencies from the strongest countries. So the CNY, the USD, the Euro, etc. So that's what you can expect. The fact that 8 billion people can hold a digital wallet on a mobile phone means that someone in Africa has the option to hold a dollar, or they can hold the local currency. Can you name a single currency in Africa that people would rather hold than the dollar? No, there isn't one. There's not a single currency in all of Africa that will survive. They're all going to be replaced with the dollar, unless the Chinese get their hooks into the country. It'll be a fight between the CNY and the USD, back and forth, and probably it'll be the USD. But they're going to use the currency for their working capital. You want that currency for 1 month's salary. The rest of your month, like we carry 1% of our balance sheet as dollars, and then 99% of our balance sheet is Bitcoin. You're going to carry enough currency to pay for your coffee and pay your rent and buy things. And then everything you don't need in the next 4 weeks, you really like to sweep into an asset that's going up in value. Right? So the killer idea is I put all my money in an asset like Bitcoin, then I actually borrow to spend in Real, or spend in Bolivar, or spend in Naira, or spend in Euro. The currencies are debasing, the assets are accreting, right? And you need both, because it's illegal you're not going to buy a cup of coffee with a bar of gold or a block of Bitcoin in Italy. And if you did, there's a tax bill, right?
At the time you're going to buy it, you sell the assets, you take the currency, and then
you're going to need Ricardo to calculate the tax bill when you transferred the amount of money to buy the coffee, because there's a taxable obligation, right? So your better idea is I borrow, $10,000 or 10,000 euros worth of currency, and I buy my coffee and I pay my rent with that, and I just carry the asset and I don't sell it because I don't want a capital gain. I don't want a taxable event by disposing of or transferring the asset. So there's a business for Bitcoin bankers or crypto bankers to convert the assets back into currencies because it's tax efficient, and it's a good idea for everybody involved, and that's going to happen.
Roberto, do you have the same view of Michael Saylor about when you picture the future? How would people use their money?
Yes, Fernando. When you see what happened with Argentinian pesos, for instance, going from what happened with the deflation of the currency, and when you see the inflation booming here in housing construction, so when you talk to wealth people, they are well positioned in real estate and many asset classes. But when you talk to the basis of the pyramid, they still have to go and buy their house, right? And when you have this huge construction inflation, their houses is pulled away when they look at their Brazilian reals salary to save money and get to buy their house. So I think I fully agree with Michael around that.
Well, in the name of Valor Econômico and Valor Invest, I would like to thank you, Michael Saylor, once again for your time. It was a great pleasure to have you with us today. Is there any final message that you'd like to give?
Yeah, my final thought is Bitcoin's a macroeconomic imperative to investors because you've got $500 trillion worth of assets, and many of them are fiat derivatives. And as the currencies debase, the assets are debasing. So there is a scramble for a non-sovereign store of value that's not a fiat derivative. And traditionally people thought of gold as that, but now they're realizing gold doesn't work and Bitcoin does. And so there's a massive flow of investors into Bitcoin. Bitcoin's also a technical imperative because it's digital energy. And that means that you can build it into an iPhone or an Android phone, and you can oscillate it at 60 megahertz. You can move it at the speed of light, and you can program it, and it's only going to get smarter, subject to Moore's law. So if you're thinking about the next great digital transformation, we had digital communications, digital music, and digital photos. This is digital property. And that means that every big tech company on earth is going to build it into their product or their device. And if you're a tech investor, you ought to buy this for that reason. And then finally, Bitcoin's a moral imperative for 8 billion people because there are 8 billion people on the planet, and most of them can't store their property or their monetary energy in other forms of property or carry it with them. It's not practical to buy $387 worth of a building. It's not practical to buy $387 worth of gold, and those assets aren't going to work anyway. So you ought to buy Bitcoin either because you want to save the world, or you ought to buy it because you believe technology is going to change the world, or you ought to buy it just because you don't want to lose your money, right? It's very simple in that regard.
Okay, well, and Roberto, do you have your final thoughts as well?
It's Fernando. Just would call the attention to the blockchain overall. We've talked a lot about Bitcoin, which is the main and winner protocol so far. But would call the attention for the blockchain revolution in terms of financial market infrastructure. As Michael said, it's bringing liquidity to things that did not have liquidity at all, and were dealt only in OTC. And very restricted to high net worth individuals. Now we can tokenize a public debt, and we've done that in a $20 token and distribute that to individuals in a 20% interest yield per year. So that's only possible in blockchain. It reduces a lot of intermediaries. It brings more yield to the investor that is taking the risk. It leaves more yield to the asset owner that developed that asset. So this is completely transforming the financial market. because it's programmable money, as Michael said. In the day we've listed this fund token, we had people buying it from 150 countries. So how could you do that before in your club membership in a poor website? So this decentralized blockchain is enabling this global liquidity 24/7. So this is going to change our lives completely.
Well, thank you again, Roberto, for joining us today to this new digital economy event, the money of the future. This event is being sponsored by Mercado Bitcoin. And thank you very much for your audience.
Thank you. Thank you,
Bye-bye.
Michael.
Thank you.